I have my family. Oh, now it gets real. Now it gets real. Let's go. Recording in progress. I have my family visiting in town from Texas. This is my last night with them. But obviously, as we're all here because this is a priority for us, right? To succeed in multifamily, to build a community where we can all be propelled forward. And so that ties us in every week. What is the purpose of this Zoom? Well, the story goes, and like I said, I never get tired saying it. Us four gentlemen came together, Marcel, myself, Victor, and Charles, burning passion for multifamily real estate, at the same time navigating several complexities and dynamics where we are in our current stage of life. Not only do we have very demanding 9 to 5 corporate jobs, which if you're a 9 to 5er in here, put a 10 in the chat. We always want to just recognize you. And of course, if you're a full-time real estate investor, hey, that's where I want to be. That's where many of us want to be in this space full time. But we understand that with the challenges of being a 9 to 5er in the corporate world, with the challenges of being married and also with small kids, which all four of us have that commonality. It's, every week there's new challenges, whether there's a baby being born like Marcel, whether you got family in town and you're trying to figure out how to take care of your 2 little kids while also hosting family in from Texas. Maybe you got a deadline to meet with your job. I know Victor had a deadline with the presentation he had to give earlier this week that was extremely high level. So navigating these complexities while also making progress, and not only making progress, but winning in the multifamily space. This is something that, not only do us 4 gentlemen, what we realized how much we need each other for this, but it shouldn't just end with us 4. There should be a way, there should be a platform, there should be a stage, there should be an entrance made for so many people navigating these complexities, navigating these challenges, to where they can have a place to go, to be supported, to be encouraged, to be inspired, to be educated, to continue making progress in this journey of multifamily real estate. So that is the purpose of this Zoom tonight. It is a stage, it is a platform, it is a gateway for all of us to continue on this journey of winning in the game of multifamily real estate. Let's go.
I love this. As always, as every week, man, this is amazing message. Matter of fact, we decided that every pitch we're going to do, Trevor is starting out our pitches now with exactly that message.
That's right, brother. We're going to trumpet it. We're going to trumpet
exactly.
it.
Hey, guys, okay, let's jump into the wins. So maybe again about the wins, right? The wins is here for you to showcase what you're doing, showcase other people also what you're doing and what you've been up to during the week, but also to inspire others to take action, right? It's always about impacting one another. It's not about the individual, right? This is about this community. So I encourage all of you guys, share your wins, be active. Matter of fact, I also love to talk to people's faces. So if you have the chance to turn on your camera, I encourage you to turn your camera so people see you face to face, right? That way people just know who you are and you don't hide behind a screen or behind a name or something like that. Get known, guys, get known, and share what you're up to, and share your face, share your everything, whatever it is, right? So with that being said, I'm gonna see Peter, who already raised his hands 5 minutes ago. That's a role in the leading by example right there, because I knew he wanted to speak first. So he already raised his hand before we even started this section. So Peter, all you, brother.
Well, it wasn't about speaking first. I'm happy to not speak first, but I'm pretty fired up to be on here tonight for sure. I have to say the biggest win though is the baby that my good friend Marcel just had this past week. That's pretty awesome stuff. Dude's got a 3-day-old baby and he's on a Zoom call on Sunday night. How about that? That's commitment right there. So
thanks, bro. Of course.
But yeah, it's about taking action, and everybody's got to figure out where they fit into this team, right? Or whatever team you plan to build, and you've got to focus on your strengths. And I started making broker calls less than 2 weeks ago. I've got about 5 brokers I'm in dialogue with. I'm having coffee with one this week. They live right here in the same town that I live in. We really made a great connection. I've already got 4 or 5 off-market deals that have been sent to me. likely none of them are any good, but the point is you can get access to off market deals very, very quickly. You just got to pick up the phone and make phone calls. That all started when I hopped on a Zoom from I saw it somewhere on Facebook probably, and the title was broker outreach, and I said, you know what, I'm hopping on that call. That's what I did. That was literally my first call. I did it live on the call. I hadn't even made any calls before that, even though I've been saying I'm going to do this for weeks, but I'm a loan officer. I have a full-time job. I'm working that all the time. So that's been my excuse, right? Well, that just started creating a bunch of activity, and I'm launching my own Zoom tomorrow to encourage people to make broker calls. And the reason that happened is when I was on that call, it was so obvious. We had, I don't know, 40 people on this call, and the guy who was leading it kept saying, who wants to make calls now? Who wants to make calls now? And no one would step up. And it just made me realize that there's so many people that come to these meetings every single week, but they can't get out of the starting block. And I know I can help them, even though I'm still in the starting block, but there's no reason for me to wait to help other people get out of the starting block. So anyway, I could go on for the whole meeting, guys. So I'm going to stop, other than saying I also hopped on a plane on Friday and went to see Carlos at his meeting Friday night, which I just learned about last Tuesday. Thought, hey, that sounds pretty cool. Then I thought, yeah, whatever. I live in Atlanta. That's not going to happen. And then the meeting was mentioned again on Wednesday night. And I looked at my wife and I said, you know what? I think I need to be in Denver on Friday. And she said, go. So I got to meet my friend Trevor. I got to meet the Wonder Kid, Brandon Ford, hung out with Carlos for a few hours. It was absolutely unbelievable. So I'm pretty fired up. If anybody hasn't made their first phone call, reach out to me, connect with me on Facebook, send me a message. I will get on the phone one-on-one with you. We'll make calls together. Get started. Just do something.
True bro giver. I love this.
That's it. I'm done.
Hey Peter, how do we contact you if they want to reach out to you and get started on that?
Yeah, I tell you, I'll put my contact information in the chat. And of course, you can find me on Facebook, real simple. Google, just search for my name. You'll find me. Send me a friend request. Send me a message on Messenger. Let's get connected. Let's trade phone numbers. Let's make calls.
I love it. Peter, you're a great example here for everybody, right? Because it's about taking action, right? One might not have it all figured out, but you just take action.
I've got nothing figured out, but I know that the amount of activity that I've created in an incredibly short period of time is absolutely mind-blowing. So I just got to get other people out of the starting block. And if I do that, we'll have, as a team, we'll have so much stuff we won't know what to do with it. We'll be buying a 400-unit building within the next 6 months. And I honestly believe that's what's going to happen. 400 units in 6 months.
It's a good point that you're making here also, right? It's not enough to just join Zoom meetings, right? It's not enough to just read books, right? It doesn't matter a single thing as long as you don't take action, as long as you don't pick up the phone, or build your team, whatever it is, it's worth nothing, right? So I love that you encourage people to do that, and this is what we're trying to do with this community here as well, right? So I'm extremely proud to see Peter here and say that, because if we wouldn't have put this Zoom together 9 weeks ago, right now, there wouldn't be a platform right now, today, at this moment, for Peter to share that, to impact other people's lives moving forward for the next weeks, months, years, whatever it is, right? So it means a lot to me as well. I love it.
I'd like to say one more thing about that, Marcel. If I'm not mistaken, you met Carlos in Sandy Springs the night I met you. Is that correct?
That's right. That's right.
So Marcel and I both met Carlos on the same day. Marcel took it a little bit more seriously than I did. He realized who Carlos was quicker than I did. But I've had a front row seat, and I've watched what's happened to Marcel over the last, it was the beginning of July, so 3 months, and it's mind-blowing what's happened. And not only Marcel, Trevor, Charles, Victor. I mean, the whole team. Many of the faces on this Zoom. Wenceslao, I don't know what he's up to yet. He and I have tried to connect a number of times. We'll get connected, but just there's a whole bunch of people on this screen that I know we're all gonna move forward together. And it's got me fired up, if you can't tell.
Come
I
on.
love this. Come on. Exactly. Fires us up too, right? How motivating, guys. I'm so exciting. And also, Peter, use our Facebook group to promote your Zoom, right? Let us know. We'll shoot it out. You use us and our community that we have created. And I'm not talking about us four, all of us in this room right now. Use it, right? Let's use it and all grow together.
I'll do it. Thank you.
Thank you, Peter. Sophie.
Hi, I just wanted to update everybody on the developments for the property that I'm negotiating. This past Monday, we put in an LOI and it's gone back and forth. There's another response going in, I believe, tomorrow. As far as I know, it's going in tomorrow. So it's gone back and forth. It's not finalized yet. So I'm excited about all that. And it's about taking action, like Marcel keeps saying. And so hopefully soon enough, I'll be able to say that we have a firm deal. And on a personal level, this past week, I've made progress with reducing my painkillers for my knee operation. I've been reducing the Dilaudid painkillers for my two knees that I got operated on Tuesday, the 25th of October, and making progress walking in my apartment and a little bit outside of my apartment, and learning to walk again at the age of 60. It's a bit of a challenge, but yeah, so making progress every day. Thanks.
I love it. I love it, Sophie. Every week you come in here and you share a new progress, right? Sophie is the perfect example of no excuses, guys. Doesn't even live in the country, lives in Canada, had partial knee replacements last week while trying to get a deal under contract, still manages to come to the US, join the mastermind, and just goes from 0 to 100, started the mentorship that we all joined 5 weeks late, right? And still manages now to be like a front runner, an absolute front runner in the community. Thanks for sharing, Sophie. I'm excited again for what to come next week.
Yeah, thank you.
Awesome. Good. I don't see any more hands. I'd like to share one win of my own, and that's that it has been touched on already, but 3 days ago, we added another freedom chaser to the community. His name is Emerson, and he'll hopefully grow up a strong, multi-family freedom chaser that lives his life with full intentionality. That's my goal for him. And yeah, we had an amazing week. It fired me up personally as well. You know, the purpose grows, guys, right? The purpose grows. So puts a little bit more pressure on me, but in a good way. In a good way. Yeah, there's more to do. I'm tired as heck, I can tell you guys, but it doesn't matter. We're here, we show up. I'm part of a team, I'm part of a community, and that's what matters, right, guys? So I'm excited for that, and I'm excited to be here. And maybe with that, it's a good time now to turn it over to our Doc Bingham to introduce our guest for today.
Yeah, well, thanks. So I get the privilege of introducing Jerry Miles. I've spoken with Jerry a few times about a couple different deals that we've ran numbers on in Oklahoma. A few of them, they didn't work out because the debt market kept changing. So my thought process was, hey, he knows the debt market. He knows what to expect. And kind of selfishly, I was like, hey, I need to get this guy in a Zoom and pick his brain. And then I was like, hey, let's bring him in, introduce him to everyone. He's a great guy. He loves questions, and let's do it. So with that being said, Jerry Miles, debt broker, he's going to give us the 411 on how to talk to a debt broker and the current debt market. How are you doing, Jerry?
Hey, good, good. Thank you. Excited to be here with you guys. This seems like I like the vibe of the group here. It's cool. So really,
100%.
really like it. And I appreciate the chance to talk to you guys, and I look forward to getting to know some of you and answering your questions and things. I'm Jerry Miles. Tell you a little bit about me first to get started and how I got where I'm at. I'm a commercial mortgage broker here in the Northern Kentucky, Cincinnati area. I started this business about, I guess, 2 months before COVID hit. So we've been through quite a few different markets here already in just a couple of short years. We started out 20 years ago, a roofing business. We've grown that over the years from residential of just trying to make enough money to feed my family here to doing really large commercial projects, shopping centers and government buildings and things like that. And then started investing in real estate. We've done quite a few fix and flips and single family duplexes, rentals, and things like that. Through that process, we were always having trouble with the debt portion of our projects. That was always an issue. We didn't have a W-2, and as a small business owner, you always try to pay as little as taxes as possible, and you don't always claim everything. You try to write things off. You buy new trucks. You do all these things to have to pay as little taxes as possible, which then hurts you when you go to get funding from the bank. So through that process, we ran into quite a few different commercial loan brokers and things along those lines. But the one thing they all seem to have in common is, from my perspective, is they weren't honest. I didn't run into one honest one, and they all really, in a lot of ways, were overcharging and under delivering. So I told my wife, I said, I think that we could do this business. I see Peter there as a loan originator, a mortgage guy. I think that's what he had said he was. I said, guys like that, they charge a point. They do the loan and they move on and they do another one, and they make good money and treat people fairly in a lot of ways. And I said, I think we could do this business in the same way with commercial mortgages and investment properties. And so, right before COVID hit, we started this business, and it's really taken up and picking up steam, and we're starting to grow and do well. So that's a little bit about me and how I got to where I'm at. And I appreciate Dr. Charles there bringing me on to talk to you guys. I was at a commercial lenders convention last week in Las Vegas, and I was there. There was probably 40 different lenders there, doing all different types of business funding, from SBA to USDA, Fannie and Freddie for the multifamilies. We had guys doing fix and flips, trade finance. So I got to talk to a lot of different guys and a lot of people that make the decisions when it comes to funding businesses and things. They all are somewhat cautiously optimistic about what's going to happen over the next the next couple years. We just had a 0.75 point raise here last week. Just following another one, a month ago. We're expecting, a lot of them are saying that we're going to get another a bump in December of another 0.5%. And a lot of them were actually saying that over the next 2 months after, January, February, we're likely to see a couple more bumps as well. It's just a matter of when they can, I guess, crunch down inflation or whatever it is. They're really, I don't know what their end game is, but they're trying to put a hurt on the real estate investor community. Whether they're trying to or not, they are. So the sellers are the ones really getting hurt. I think it's going to bring some real opportunities to guys that are trying to buy properties. But in the short term, right now, it's kind of a waiting game on a lot of these deals that I'm seeing, as far as, as the sellers get to where they have to sell and the buyers just hold firm on their positions, the sellers are going to have to sell. I mean, it's uncommon to see guys with more than a 5 or 7 year fixed rate on these multifamily loans. And and there's going to be a lot of them coming up here where their rates are going to start changing and things on them. So, really historically, the rates that we're seeing now are, on a historical basis, they're not, they're really still good rates. When you're looking at the Freddie and Fannie, and we're looking at, rates, they haven't come out with the new rates since the rate hike. And they'll be coming this week more than likely. But you're still looking in the 7% range, probably upper 7s on a lot of the Fannie and Freddie. And, historically, that, over the last, 30, 40 years, that's a good rate. I mean, we've been in the teens, we've been in the 20s. So, and it's not so much where the rates are at currently, it's where we've been at, in the previous several years, where we could get loans at 2 and 3 and 4%. And that's what things were selling at, is, based on that 2, 3, 4%. And all of a sudden now we're at, 7 and 8, even higher in some instances. We do a lot of SBA loans as well. And the SBAs right now are, anywhere from 10 to 12% for an SBA loan to buy real estate for a business. So it's not really the rate in particular, it's just the speed at which that we've gotten here where we're at. The person that could afford $1 million mortgage and was shopping for $1 million house, 5-6 months ago, now under these interest rates and these conditions, where that same person can't shop for anything more than a $600,000 house. So that right there is the big issue. So there isn't really much else I want to ramble on about, but it would, I would like to take questions, so that way I'm not just rambling, and I'm actually answering people's questions and the concerns I have. So that'll help us keep going here, I think. So.
Yeah, I got one. With the debt market continuing to rise, how are you seeing deals being structured now? Are they still doing the 35% down, just bringing the price way down, or are more people transitioning to like 45 to 50% down?
Yeah, I haven't seen sellers as of yet coming down. I mean, I saw the picture of the Dane there on the screen, so I guess it's okay. Is it okay to talk about that one?
Yeah, we can talk about that one.
Okay. Yeah, I mean, that one in particular, I was when I was at my event, I got a call from I'm a broker, and so I deal with the lenders directly, but my Freddie Mac guy called me on that one, and he was saying, is this right? Is this what they're offering, or is that what they're getting it for? He was like, this looks like a nice deal. He said, I haven't really seen one like this in a while, Most of them actually that I've been underwriting lately are, the buyers bringing down, 45%, 45. I've even seen one recently that they were bringing 50%. And it's not because the lenders don't want to lend more. The criteria for Freddie Mac, Fannie Mae, it hasn't changed. I mean, Freddie Mac loans, they will loan up to 80% loan to value. So if you can find a deal where you only have to put 20% down through Freddie Mac, that's possible. But we're stopped because of the debt service. We need a 1.25 debt service coverage ratio, and if you need to put 50% down to get to that point, that's just where it's at. I think we'll get back to some normality at some point. Some of these sellers are going to be squeezed, and I guess guys that can afford to are going to hang on. But there's a lot of buyers out there that overpaid, and they're going to be crunched out of the market.
Yeah, I was looking at some deals, and with having to put so much down, seems like you're gonna have to increase the hold period. I know a lot of people are doing like a 5-year hold. Now it seems like it's gonna transition more to a 10-year. What do you think about that?
I had somebody asking me. We went to a real estate. We're part of another real estate club. My wife and I are, and somebody was asking me about that. Like, what do you think about the 5-year holds? Because that real estate group that we're in, that's what they talk about doing. 3 to 5 to 7-year holds, and I said, it's really not a good idea to put a time frame on it. I mean, you can put a guide, but if you say, hey, by this date we're going to have it sold and we're going to do this, you're going to hurt yourself. I mean, hopefully not, but nobody knows how long this downturn that we're in is going to last. We're just at the beginning of it, so, historically real estate goes up, over, the 5-year, over the 10-year, it's historically always gone up, but, there's always downturns, and there's unknown things that happen. And, I don't like, me personally, I think you're better off telling your investors, hey, look, this is a good property. It's going to cash flow. We're not going to lose the property. Over time, it's going to go up. What that time frame is, we don't know. That's the way I would approach them. Transparency and honesty, I think, is the best policy. And there's a lot of salesmen out there that, when I say salesmen, just guys that are really pushing, trying to get things done, and it's not always what's best for you got to think about your investors first, and it's not always the best thing for the investors, so.
Awesome. Hey, let me jump here really quick. Hey, Jerry, thanks so much for coming on. I just wanted to encourage our audience, because we have just a vast variety of experience represented here with our community tonight. And so I just wanted to encourage everybody, hey, if there's some vocabulary words related to the debt market that you guys don't quite understand, just throw it in the chat. Like, hey, what's Fannie? Hey, what's Freddie? Hey, what's a debt service? We want to make sure that we just address that really quick for you guys tonight. So if you have one of those questions, hey, just pop it in the chat. We'll make sure we get to it. So just a friendly reminder to everyone. Maybe we'll pass the ball to one of the folks that had their hands raised up.
Oh, okay, yeah.
Oh, I think Mr. I'm gonna call him Dubs nowadays, had his hands up the first time as the first one. So Dubs, stage is yours, brother.
Hey, first of all, I think your son and my grandson were born right about the same time, maybe within a couple of days of each other. So congratulations. Yeah. First of all, I'm planning to go meet him up. They live in Orlando, so I'm planning to drive up on Wednesday. And so I'll have pictures. So hopefully you'll have some pictures too, Marcel.
Yes, excited for it. And congrats, brother. I saw that.
Oh man, thank you so much. I never thought this day would come. I got 2 older boys. My daughter's the youngest. She's 25, 26. I don't remember anymore. I'm too excited to think about it. And she's the first one to make me a granddad. And so it's kind of a surprise. You would never expect your youngest to make you a grandfather first, but that's the way it just worked out. Anyways, I wanted to, first of all, thank you, Jerry. I love the fact that you come in and you bring your your mind to this and your knowledge and everything that we need to know about the debt market. I'm curious, I think others have asked in the chat, but Joel, sorry, I know you asked for it, but I'm gonna beat you to it and ask for it here in live about the cap rates and what those, thinking about the cap rates. I'm kind of, as I talk to brokers as well, and the question comes up, some of the things that I'm trying to gear the conversation towards is the flexibility of sellers. And not only are they flexible on price, but on terms. And one of the things that I'm thinking about on the other side, on the equity side, is also how do you approach the investors and potential investors as to what this deal can bring? I don't want to lock myself for any team on a preferred rate, not knowing what the caps will be, a tit below market on the lender side, or just above or above par. And either way, how thin and tight that could be as far as maybe paying a preferred or not paying a preferred, and then negotiating that as to maybe do a split 80-20 and then maybe flip it to 70-30 after 3 or 5 years with a preferred at that time, or some other arrangement. So I don't know what are the things that you're seeing or others are seeing or starting to negotiate, and maybe you can shed some light on these things.
Hopefully I answer all the questions there. But as far as the, as a new investor, I see a lot of people. I've seen some here recently, or one in particular. It was a really tight deal, and it was out in California, beautiful, almost oceanside apartment building, and they're buying this building, and it's, I mean, I don't know. Most people here might be in the Midwest. I'm in the Midwest. I look at a lot of stuff in other places, but the idea of paying as much as they were paying for a property to me was just mind-boggling, for what they were getting. But it was, they were going to do a 85-15 split with the equity coming in, just because they needed the equity to, they needed to give up more of it to get the thing done. It was like they I think from what I remember right, they were bringing in 60% equity on this deal, and
Wow.
and it was actually to get a long-term loan. They would have probably been only 35%, on the debt. That's they could have only borrowed 35% of the deal, but they ended up going with a bridge loan because I could get a little more.
Wow.
But
I mean, was that a good deal? I mean, if you have to go and so high leverage on the equity side, and
I am not an expert in the California market. This guy is, and I mean, he's planning on making 10 million bucks or so on it over the next couple years. So it was possibly, I mean, hopefully it works out for him.
yeah.
He's a strong investor, and I think it will. It might not be in a couple years, with the way the market's going right now, but it'll work out eventually, I believe. But
And what about the rate and cap rates? How tightly knitted are they now, as far as you can see?
the cap rates right now, I mean, where you used to say, well, hey, in the Cincinnati market on a B property, you're going to be 5-6%. In Florida and Miami, you might be in 3s. It's just there isn't really any set guidance. I mean, the way the rates have jumped up so fast, there's not been enough properties that have sold under this. I mean, it's really a new market in comparison to 4 months ago.
Mhm.
So there's not been enough properties sell in all these markets to really say, hey, that's what the cap rate is in this market now. I haven't seen it to where you can specifically say. I mean, the brokers that are selling the properties are still trying to sell the same properties at a 6%, at a 5%. But it's not reality right now. I mean,
Unless you're a
there's
freedom
still some-
chaser and you get a seller to give you 3% interest only deal or something.
Yeah, and I mean, a lot of these loans, I mean, I encourage you guys, if you're looking at deals, I mean, ask these people that are selling to, you know, for those types of things. Ask them for, you know, you find out if the current mortgage is assumable. I mean, some of these mortgages are 3 and 4%. I mean, you take out an assumable deal. I mean, I'm not getting paid on it, but that's probably your best option, really. I mean, you know, if it's a Freddie or Fannie loan, you usually pay 1 point to transfer it over to you. You still have to qualify through Freddie, Fannie Mae. You have to qualify for these loans still. So if you're picking up a you know, $10 million loan from Freddie Mac, you've got to be able to show that you have a $10 million net worth between you and the partners or whoever's purchasing. You know, equal or greater than the value of the loan is what you need. And then you need to have like 9 months of
Reserve.
reserves for your payment, for your debt service. So
Yeah, definitely a different market.
yeah, those are really good deals right now. If you can find some of those that are assumable. You know, I still would be cautious. You know, because and look at how long the time frame, you know, how long the term is on a loan. You know, really look at it close. I mean, if you get one that you want me to look at, I'm more than happy to look at it for you and let you know what I think of it. You know, with those, I had a guy recently that called me and said, "Hey, this deal, I think, you know, I want you to look at this deal for me. It's an assumable loan, but tell me if you think this assumable loan is my best option." You know, I said, "Yeah, I mean, 4%, you know, compared to the 6.5 I'd be giving you, that's definitely your best option, you know."
Yeah.
And
We'll get you on the rebound on the refi.
yeah, I mean, I'm here, you know, I've been in business for a long time. I mean, and you know, even in the construction business we were in previously, you know, and then having tenants, you know, through rental properties, now in the commercial mortgage business, you know, it's all about service. You know, if you're you know, like Dr. Bingham here, you know, it's service. You know, he's got to service his patients. You know, I want to service people, and service doesn't mean I'm giving you a product and making some money on it. It's say, you know, I'm an expert in my field, and I'm going to do what's best for you. You know, with the knowledge I have. You know, so.
Hey, Jerry, I want to throw something in here really quick,
Yeah.
because since you're talking about loan assumptions, this is something very much on the 9 to 5 multifamily freedom chasers radar right now. And so I was wondering if you could maybe just define that for some of us that maybe not know exactly what that is, and then just kind of outline the process, the mechanics of what it looks like and what's required to assume someone else's loan.
Yeah. You know, first the loan has to be assumable. You know, in this market, the broker that's selling a property is going to find that out right away. You know, because that's a big sales point for him. You know, so if it is an assumable loan, you know, it'll be just a matter of getting that contract signed, going in, asking for the loan docs of the you know, the mortgage docs from that loan that's assumable. You know, I would have a lawyer look at them. You know, go ahead and pay the money, have a lawyer look at them, make sure everything's good. Then, you know, that bank or the servicing company of that loan is going to then go to you, and you're going to have to turn in all the docs that you would normally turn in if you were applying for a new loan. You know, so you're going to have to show your SREO, or your schedule of real estate owned. They'll ask for a PFS, which is your personal financial statement. They're going to ask for you know, eventually tax returns and things on you know, you and your partners, all those types of things they're going to ask for. So they're going to qualify you for the loan, and then you'll have a closing just like you would normally.
And this is where, you know, let's say the individual or the team just in and of themselves, maybe they wouldn't qualify just them directly, but they'd bring on a KP, right? A key person
Yeah.
that would meet those qualifications and get
Yeah.
everything moving forward.
Yeah, and I mean, if it's it doesn't have to be one person too, you know, I mean, if you have, you know, 3 or 4 partners and it's, you know, $5 million loan and those 3 or 4 guys or girls or whoever can get together and you guys all together have the net worth, you can all sign on the loan together as well. So,
Cool. Thank you.
yeah.
Hey, I would love to chime in there, and Jerry, thanks for dropping all this value here for this community. This is very much appreciated. And I want to speak to the community. This is really your chance speaking to somebody that's extremely successful in the industry and asking all the questions, right, that you might consider, which I don't, as like silly or easy questions, right? Because you'll be reaching out to the Jerrys in this industry, and you don't want to ask these Jerrys these questions that you can ask right here, right now, right? So I encourage you guys, utilize this opportunity to ask all the questions that there might be, whether that's in the chat, whether that's raising your hand right here, right now, and use that opportunity. And Jerry, maybe before we turn it over to Peter, because I know he's next in line, maybe one question to you. How would you define what is the best way to approach a debt broker without really having, you know, that track record of a couple of years experience, you know, maybe not knowing the industry well? Like, what's the best approach, you know, towards someone to you without you thinking like, this guy's full of crap?
You know, and that's a tough one. You know, I get a lot of calls. You know, we stay really busy, just fielding phone calls. You know, so that is a tough one. You know, I mean, first of all, I mean, everybody in this group here, I know you guys are already in the game. You know, you're learning and you're doing things. You know, a lot of people that call, you know, we've done a lot of internet marketing and things in the past. You know, and I would have, you know, 20 people call every couple days, and you know, maybe one of them would be a qualified borrower. You know, and the rest of them, you know, they would have watched a couple of videos on YouTube and really wanting, and they're hungry and want to do things, but you know, they just, you know, you don't know what you don't know. And so, you know, calling and you know, I mean, it might have been, you know, they're wanting to buy a $50 million project, and you know, so I'll fish around and, you know, hey, you know, what other property do you have? You know, they don't have any. You know, they don't own their own home. You know, they don't have these things, and then, you know, they don't know anybody else that does either. You know, so a lot of times, I mean, that is a really tough thing to overcome. And you know, you know, and it's, I had a guy recently that was on a call like this, and he was asking me kind of the same question, and I was telling him, you know, don't worry about, you know, and he was a single family investor, and so when he was calling, or no, that was a phone call. Sorry, it wasn't on one of these calls like this. It was and I'm talking to him, and he's asking me about talking to the sales brokers, and I said, you know, well, you know, and he says, I've never done multifamily, but I want to buy multifamily. And so I'm talking to him, and I find out that he's been a wholesaler, you know, for the last 5 years, and he was a big wholesaler. And so I was like, you know, use that experience. Tell him, hey, I've wholesaled. I've sold 20 houses a year the last 5 years. You know, I bought and sold all these houses. You know, you can, and I would be honest with people and tell them, hey, you know, I'm new. I've got a team of buyers. I'm you know, working on this. We've got a deal we're working on. Would you be able to give me a quote on it? You know, but you know, like I said, a lot of people that call that might come from the internet and things like that. You know, I've tried steering people to these types of calls before. You know, just because you need that base of knowledge. You can't just watch some, you know, Bigger Pockets podcasts and then think that you're ready to jump out and you know, and you know, you don't have partners, you don't have you know, you don't have a team. I mean, everybody on that, I mean, there's 40 people on here now, and all 40 people on here, I'd say, have access to you guys here that are doing this call and are looking to buy properties. And I would use those relationships. And maybe you do have trouble getting a hold of a broker or finding a debt broker to talk to you. But maybe you call Trevor or Dr. Charles or Marcel and you say, hey, I've got this deal here. Maybe, I don't want to give you guys extra work, but that might be what's needed to be able to get a quote on something. You guys are here for the community. So I mean, that might be the best option if you're having trouble getting through and talking to somebody. So,
and I think you pointed out two important things here, right? The first one is transparency, right? It's important to be yourself. It's important to be honest, and it's important not to try to paint a picture that's not real, right? Because at some point you're going to get caught in that picture. You're not going to be able to produce on what you're saying, right? And that's gonna, I mean, it's not just going to burn your bridge. It's just not productive whatsoever, especially on time spent, right? Number two is it's all about the people. It's about the team. Multifamily or commercial real estate really, to us, is a team sport, right? It's not like a one-man show. So that's what we're also trying to build this community here, guys, right? It's about, let's all get it done together. Let's utilize this community. We all do deals together. Utilize what this community has done, right? I mean, we also always mention how Doc Bingham has already, how many units do you have, Doc, at this point? How many units?
Are we talking just multifamily
units.
Or are we talking
Yeah.
storage units too?
All the units currently that have a door in your portfolio that you have ownership.
So I have 678 units multifamily. I have now right around 280 storage and 2 warehouses.
There you go. So see, now the multifamily Freedom Chaser group that submits an LOI and submits a bio, guess how many units we collectively as a group have under ownership right now? Exactly, right? You utilize the community, utilize the people, and this is not a lie, right? Because this is the experience of Doc Bingham coming into our group, sharing that wealth with the group, and portraying that confidence and that knowledge into the deal, right? So it's important to utilize the people around you guys, utilize the people and send and paint a transparent picture. I really love what you said there, Jerry. I think that's really important. All right, enough of me. Let's turn it over to Peter. I know Peter is patiently waiting there to shoot his question.
So I actually didn't, it wasn't a question, it was a comment I was going to make. And you guys just talked about exactly what I was going to say. It's, first of all, I was going to start with the fact that, I love the fact that Jerry's on here and he's a lender, right? And I'm a lender. It seems like he's a competitor of mine, right? And he is on a certain level. But at the end of the day, some of the best connections I've made in all the networking I've been doing over the last year are other lenders. We all do different things. We all have different skills, different relationships. And there are things that Jerry does that I don't do. And there are probably things that I do that Jerry doesn't do.
Oh, yeah.
But even more important than that for me is Jerry does a whole bunch of things I don't do. And I'm going to be contacting Jerry, and Jerry and I are going to be doing business together because
Oh, yeah.
I got plenty of leads that I can't do anything with. My company can't do anything with, but I know who does. I know who can do something with them. I have a $25 million request right now for a construction loan. I have nowhere to put that. Jerry might have some relationships.
Let's
In fact,
go.
Jerry, I think we need to talk tomorrow morning.
Let's do it.
So, but beyond that, what I wanted to really get across to everybody on this call, I know, I mean, a lot of your faces are familiar to me. I've seen you on here many times, and I know a lot of you realize what we have here. But I know that some of you don't fully understand that, okay? Carlos Salguero he's purchased 1,000 doors probably, and how many does he have under contract right now? How many are in the pipeline? It's who the heck even knows? Carlos is directly connected to Grant Cardone. Grant Cardone controls billions of, who knows how much, and he's continuing to expand that. Carlos Salguero is going to control $1 billion in real estate. And there are many people in this room that are going to make sure that happens. That are going to help him do that. So everybody on this call is only one person away from Carlos Salguero. And many of us can pick up the phone at any time and call Trevor, call Marcel, call Charles, call Victor. We have direct access to a team of people who are doing serious business right here, right now. So when I'm talking to these brokers, I am talking to them as if I've been in this business for 20 years. I don't tell them that. I tell them I'm brand spanking new. I'm 57 years old and I'm talking to 20-year-olds who, and I tell them I'm new, but I'm on a team. I have a team around me that can close any deal that you can bring to me. If it underwrites, I don't care if it's 60 units. I don't care if it's 6,000 units. And I say that with total seriousness. If we find a multifamily asset that has 6,000 units and it underwrites and cash flows, we will get that deal done. And I believe that with all my heart. And my goal is to make sure everybody on this Zoom call and every other Zoom call I get on understands that and believes that as well, because that's the confidence you need to bring when you're talking to these people. And there's absolutely no reason why you can't. If you're on this Zoom, you have access to those people that can get that done.
Exactly. Matter of fact, we're scheduled to close a deal with Carlos together on Friday, this coming Friday. So fingers crossed, fingers crossed. It's all about the attorneys right now that they get their stuff done on time. But you're right, Peter. That's exactly what it is. You're just one person away. It's really all about that. And again, it's all about the people, right? Leverage your network. What does Carlos always say? Your network is your net worth. Simple as that, right? Thank you, Peter. All right, we have Ellen.
I think you're talking to me.
Ellen Drea.
Yes.
That's what it was. Ellen Drea. Here we go. Thanks for joining. I think it's first time here, right?
Yeah, I didn't know about you 9 weeks ago, you were talking about a 9 to 5. My 9 to 5 is not 9 to 5. So it is 4:30 in the morning here.
Oh boy. Oh boy. Where are you?
I'm in Bulgaria.
Wow. Wow.
And I just got off work. I went to work at noon and got off at like 1 o'clock in the morning. And then I saw the pop up and I'm like, I don't know if I can make it, but here I am.
Man, taking action, commitment. I love it. Amazing. Thanks for joining.
Thank you. Thank you. Lots of familiar faces on here. I've been bumping heads with the dub. Is that what we're calling him now? The dub?
That's how I call him now.
So my questions, I'm kind of a newbie, and my numbers guy, the Alan of the Alandrea, isn't on right now, and he probably knows all this, but I'm not so sure. You talked about the debt service coverage ratio, Jerry,
Yep.
and I was wondering how the heck you figure that out, what that is.
Yeah. Well, you take all of the expenses, all the income on the property, subtract the expenses, like your regular expenses of maintenance, insurance, taxes, all those things. And then at that point, you have what left over is your cash flow. You take your cash flow, and then you take what your mortgage payment is, the yearly mortgage payment, and the yearly cash flow. And you want your cash flow to be 1.25 times higher than your debt service, than the mortgage payment.
So does that mean you divide cash flow by your mortgage payment? Or
Yes.
mortgage payment by the cash flow?
Yeah, it's one or the other. Yeah. But it'll if you're making 100,000, or if you're making 120,000, you want your or or 125,000, you want your debt service to be 100,000 or less.
So that's your annual mortgage payments is your debt
Yeah.
service.
Your annual mortgage payments and or annual cash flow.
Okay, so
That's
you
what
said,
Jerry makes sure that you cash flow, right? Because if you
Okay.
can cash flow, you can't pay your debt.
That's it. Yeah, that's, then the lenders, I mean, you know, when you're underwriting a deal, like to purchase the deal, I mean, you're looking at your cash on cash, you're looking at all these different metrics. When we look at a deal, we look at the, you know, the expenses really close. You know, because a lot of things can be hidden in expenses. We look at the income really close. You know, and then we try to get to that debt service coverage as best as we can, and that's the most important thing. That I mean, to a lender, when you're looking at long-term debt, the debt service is their primary metric. And you know, in a lot of cases recently, we've been looking at a lot more bridge debt instead of the long-term debt. I don't think I talked about bridge debt. But the bridge debt, you know, a lot of times when the properties aren't cash flowing and things and don't get the good debt service because maybe improper management and things like that, you know, you might go to a 1 or 2 year bridge loan. And when the bridge lender isn't looking at the debt service as much, he looks at you to make sure that you can make those payments over the next 2 years or the 1 year, whatever the time frame of the loan is. But the biggest thing they're looking at is exit strategy. You know, they lend that money and it's short term, and they want to know, they're looking at what your debt service is going to be in 2 years when you go to refinance into a long-term loan. And they want to know that this person can get out of what they, you know, get the money back to me that I'm owed. So
then
that's it. Yeah, go ahead.
I also wanted to know, so you're a broker, but Peter's a lender. So a broker is a go between me and Peter, right? Am I understanding what a broker is?
Yeah, a broker, I go directly from the borrower to the lender. You know, I've got a lot of different options for people. Each lender, you know, most of the lenders are pretty specific on what they lend on. You know, my Freddie and Fannie guy, they lend on Freddie and Fannie, and they have some conventional products, but they won't do bridge loans. They won't do USDA. They won't do SBA. They won't do anything like that. You know, I have somebody coming to me that you know, is wanting to buy storage units. You know, a really good way to finance storage units right now, I think, is through SBA. Because as long as the debt service works out, you know, I have SBA guys that'll lend 90% of the loan amount, or of the purchase amount on storage units. So you can get in with 10% down on a lot of storage units right now through SBA.
Hey, Jerry.
Yeah.
For people that may not know, what is SBA?
Small Business Administration. It's a government program. You know, they allocate a certain amount of money to the small business community. Generally, small business loans are $5 million and below. There are certain cases where you can go up to 10 million, you know, depending on the business and depending on what the situation is. You know, there's a lot of weeds we can go into with the SBAs. There's a 7A and there's a 504. 504 loans are really specific. When you're borrowing from 504, they're really tight and really narrow on what they want from you and what they expect of you. The 7A is a little less, not as good on the terms and rates and things, but you know, a lot of times with a 7A, if you're borrowing, you can get some extra money. They don't really watch and not really concerned with what you spend that money on once you get that extra money and things. You know, so it's not all real estate involved, but SBA can be a really nice way to get into some real estate. I've seen some people recently that buy businesses that have real estate attached. And you know, they'll buy that business with the real estate, you know, turn around and then they'll sell the real estate and keep the business, or sell the business and keep the real estate. You know, there's a lot of different ways people do things with that, but yeah, like Dr. Charles was saying, he's got a lot of different a lot of different types of property. There's a lot of different ways to do real estate. So
this is where you really come into play, Jerry, right? Maybe to tell everybody here really the value of a debt broker, right? Because there is a certain, like, Jerry will receive some money for his services, right? Because Jerry's family has to eat, right? But here's the thing. I mean, I guarantee you, maybe let's take Peter out of the equation, but I guarantee you, Jerry alone has so many contacts in regards to lenders and their products, more than compared to each of us combined in this room, right? And this is really where, yeah, you pay a little bit of a service, and that's kind of wiggled into the whole product that in the end you're offering, right? But you have such a much wider network and wider opportunity of products that one can access through somebody like you. I mean, heck, I know when I tried to refi out single family homes, I mean, I had like my 4, 5, 6 go-tos. Actually, I'm doing one right now where Peter is helping me with. But if you translate that into the commercial aspect, if I had somebody like Jerry, right, who has like freaking like 500 lenders that he knows exactly what they offer, what the current rates are, what the current products are, what the current requirements are, that's where that really comes into play, where that really adds value. And that's where a good debt broker, and here's the thing, a good debt broker is what Jerry touched on earlier, a honest debt broker, somebody that also wants you to win and not just himself, has tremendous value, guys. Absolute tremendous value, because there's 2 things that make or break a deal, right? From the get-go. One is the equity, and the other one is a debt. It's a big part of the deal, and your debt broker or your lender is really your biggest partner to get a transaction done.
yeah, and you know, just for transparency's sake, you know, on my end, you know, on real estate loans, anything over $1 million, I charge 1%. So that's what you can expect from me. You know, and like with my Fannie Freddie guys, I think a lot of you guys are looking at multifamilies, and that's where I try to place them, because that's the best rates and terms I have available through Freddie and Fannie. You know, and my lender is generally 3/4 to a percent, and then I'm 1%.
But you make up for it, right, Jerry? That's the thing. So if I was to go out on my own, I'd likely still pay more, right? Because I just don't have the context, I don't have the connection, nor the knowledge as you do, as if I would have went through you.
Yeah, and generally when you call the like if you was to call one of my lenders directly, you know, I'm tied in with them, and so I'm getting their pricing on closing, and then I'm working as a loan officer for them. So when you call them directly, you're still paying my point. It's just going to somebody in-house. Somebody in-house there ends up taking the call, and then they get the point. So that's not always the way it works, but it is generally the way it works with most of my lenders. And you know, and just for transparency's sake, he was saying I have a lot of lenders. I have a lot of contacts with lenders. I met, I don't know, 40 or 60 new lenders last week at a national association I went to. But you know, there's no way for me to be an expert on every one of them products. You know, we're working on right now we're working on a deal, and it's a trade finance deal where one country is buying sugar from another country, and the countries don't trust each other, so they need a go-between between 2 countries, and so the bank comes in, and I'm the broker on that. I don't know anything about this deal, but I know the guy that does. You know, and I met him through our National Association of Lenders. So I go to him, and he tells me what we need to do, what all the different documents I need and all those things, and then it starts working. So
there you go.
and,
But the thing is, you're spending 110% of your time and focus on this, right? Even if we look at our team, we're 9-to-5ers. I mean, I'm just calling it 9-to-5ers in our group, right? And if we can spend 10% of our time that we focus on in multifamily real estate commercial on debt, I mean, just look at the wealth in knowledge, right? Alone, and the wealth in network. You 110% focused, us like, I mean, compared to you, no brainer.
yeah.
And if we need to trade sugar to a different country, now we know who to call too.
Yeah, you run into some crazy stuff sometimes,
Love it. Okay, let's Andrea, do you have another question here for Jerry, or has that been answered?
Well, I just, it was just more about him, he said he just decided he wanted to be a broker one day. And I was just like, how do you go about just being like, I think I'm going to be a broker today?
Yeah. And I'll tell you how that happened. We went through the process, and it was kind of a painful process with some of the guys we were dealing with. And we started researching and learning. We've been on the borrower side a lot. We bought and sold a lot. And I found a training group, like you guys have all, I don't know how many, there's a lot of people here that are in the Grant Cardone's Real Estate Club and things. But I found a training group. I paid a lot of money. I went to a 7-day class up in Albany, New York. My wife went to the same class the next month, and they are a National Association of Commercial Loan Brokers. I went through the class, learned. The lenders all come in each one at a time and talk to us and teach us about their products. We learn about the law, about the different things that we need to do on our end to protect the lenders, protect the borrowers, protect ourselves. But the main thing was networking with the lenders and learning, who's there, what's available, learning about their products enough to when somebody brings me something, I know where to take it, I know what to do with it, and so that's how it happened. And I never, I spent 20 years where we still own our roofing company. We have some big projects that are going on right now. I'm not hands-on with it anymore, but I never wanted to be in that business. I had my first son at 16. I was in the 10th grade in school, and I needed to start making money, and I started putting roofs on, and it turned into a good business for us, and it's been good for us. But we wanted to be investors, and through that process, you find out where weak points are in the market, and I saw the need for a good lending broker that was going to be honest and transparent, and so that's how we stepped into it. So just seeing the need, and I know in the future that there's going to be a need. As I'm looking at the real estate lending field, and I'm looking at the lenders that are available, the deals that are out there, at some point I'm gonna narrow down like what area is needing new lenders and new products, and we'll eventually launch our own product and have our own product that we're going to guys like me and trying to get them to sell our products. So
amazing. Just
a little bit about me.
That's fantastic. Thanks, Jerry.
Yeah.
Thank you.
Yeah, enjoying the questions. I think we got a few other questions. Marcel, who was next? I don't know who raised their hand first.
I think Alejandro is next. And guys, since we want to make sure also we're always mindful of our speaker's time, of course, right? Because I know it's Sunday night. Jerry also wants to get back to his family at some point. Let's do these 3 more questions that we have, and then we conclude our session for today. And maybe we need to bring Jerry back, man. If we have so many questions here, maybe we need to bring Jerry back. and
Gotta
and
get,
do
I
nothing.
like
gotta
this
get
call.
Jerry.
I'll be on this call next week. I mean, you know, I like this. This is a nice group.
Hey, so listen, Jerry, I'll just jump into it. My focus has been cell phone towers across Latin America. And
Okay.
one of the things that we're looking to pivot to is, you know, doing some investing across the US with our capital and with our investors' capital. You know, and doing cell towers is totally different to, you know, what you guys are doing in this group, which I want to learn a bunch about. But my question goes to the following. The majority of my current, let's say, investors are all foreign nationals, right? And, you know, we have the assets, have the abilities, but what you'll see is, you know, startup companies that are, you know, got X or YZ capital, but there's no track record, social securities or any of that good stuff, right? Because majority of these guys are offshore. So I'm assuming there's products for that. How much importance is the asset versus the individual? And the reason I say the asset versus the individual is we've been able to get, you know, almost $100 million worth of loans in Latin America. But the reason why is my off takers are, you know, AT&T Mexico and things of that nature, which are high quality. So that was my quick question there.
Yeah. You know, having an LLC, I mean, you need all the legal docs and things in the country. You know, but that would be more of a question I would have to go to my actual lenders about, because each one of them, like I said, each one of them are different. They all have their own requirements.
Okay.
It might be more of an issue when we go to somebody like Fannie, Freddie Mac. You know, until you get a couple deals under your belt here in the U.S. and you have that net worth it's here on this soil, before you can really go after the really good prime rates and terms. You know, so we might have to. I have some conventional products that you know, are done by little credit unions and kind of small town banks, and that might be who we'd have to go to for some of those to get you started with.
Or the workaround is, I guess, partnering up with a couple of the guys that have, you know, deals under their belt and
Oh, yeah,
powering that up a bit, right?
That's always the workaround, you know. You know, but if you're able to come and possibly purchase something with cash and then you know, do a refi, but that would definitely be something I would need to talk to my lenders and involve their legal
Cool.
team on. You know, they all have their own legal teams, and you know, that would be something I would need to probably consult them on before I give you real definite
All right.
information on. So
No worries. Thanks, man.
There's always a chance, right, to reach out to Jerry offline, right? I mean, all of you guys here, right? Jerry's here now to take on additional business, right, Jerry?
course,
So we'll make sure that maybe what we do, Jerry, is we share also your business card or something like that, right? Your business
yeah, I'll
context.
put my information in the chat here.
Perfect.
Yeah.
Awesome. Thank you, Alejandro.
Well,
Let's go, Jabaris.
How we doing, everyone?
Amazing.
I really just had one simple question. That's it. So Forrest, would it be okay to reach out to fee management companies that manage apartment complexes for owners? No different from how you would with brokers. I'm asking because I used to work for a company like that a long time ago. And pretty much, so of course, the owner has a property and out of state or whatever, and they just don't want to manage it. So of course, they're using a management company. So I used to work for two of them. One was Lane and another one was called Round Partners. And they manage a lot of apartment complexes for owners. Some of them may have multiple properties, some of them may just have one or whatever the case may be. But would it be okay? Because of course they're running their books and everything like that. So you know, they know who's looking to be delinquent and behind and, you know, stuff like that. And would the owner reach out to the fee management company sometimes, or would they just give them their notice to let them know that they're getting rid of them? Or would it just be better to just go direct through the broker?
You know, I would say you'd probably have to go to the broker, because if you're talking about calling the management companies to get the owner's name, is that what you're meaning?
Well, I mean, even building the relationships with the area managers,
Yeah,
the VPs, because of course they're the ones that's managing, 5 or 10 properties at a time and stuff like that. So,
Yeah.
building a relationship with, someone in the corporate office, of course.
I would say it's always good to build relationships with anybody and everybody in the real estate business.
Mhm.
First of all, if somebody's in the real estate business and you're wanting to be, or you are in the real estate business, it's always good to build a relationship with that person. But I don't know that the managers and people in those companies are going to be real forthcoming with like giving owner contact information and things because
Well, no,
they kind of
I'm
hold their
sorry.
relationships dear. But I know that there's certain websites, Crexy, for instance. If
Okay.
you can spend like $1,200 a year, and you'll get an option on there to where you can. They do the best they can on that site to let you know who the owners are of different properties. So you
Okay.
can click on individual properties. It'll have, it's not always real accurate, but a lot of times it is. You click on the property, it'll pull up, who holds the mortgage, it'll pull up who owns the property, it'll pull up all those types of things. And a lot of times it'll even tell you like, on the mortgage, it'll tell you what the term and the terms of the loan are. So it'll tell you like, well, it was a 5-year term on a 30-year amortized loan. And they bought it 4 years ago or refinanced 4 years ago, over the next year that their rate's going to go adjustable. I mean, that's somebody that's going to be wanting to sell.
Okay.
Because right now they aren't going to want to refinance, because they're more than likely 4 years ago, they're at a 4 or 5% interest rate, and to refinance, they're going to be a lot higher than that, and maybe not cash flowing anymore.
What's the double?
So I mean, I would say yes, building relationships in real estate is the best way to do real estate. But there's other ways to find owners and to find out, things about properties. So I mean, even your local, like, all your all's local areas, you have little real estate gatherings and things. And I would try to hit more of these types of groups and meeting people. And then locally in your area, if you're wanting to buy in your local area, just getting a handle on who the other investors in your area are, even if it's single family investors or smaller multifamily investors. Get to know those guys, because those guys know other guys, and that's where it goes.
Thank you.
Yeah.
Awesome. All right, then let's move to Daniel. And if Daniel's question is a quick one, we'll also find the time to get to Sean before we close, guys. Daniel, nice to see you, brother, again.
What's up, brother? Thanks for doing this. Thanks, Jerry, for hopping on with us.
Yeah.
Man, I hope this is a quick question. I'm a newbie, and so I do apologize if this was touched on earlier, but in sort of this high interest rate environment, relatively speaking, I know a lot of my buddies, they're having their underwriting being crushed because of, higher interest rates, rising interest rates. And so how are your clients, for example, getting creative with their financing during this environment? Like, are they using different types of debt? Are they what are they doing to finance their properties today?
Well, I mean, since these rates have gone up, there's not been a lot of new financing happening, really. I mean, it's really gone. I mean, there are deals happening, but it's not always happening with new financing. There's a lot of deals being done, between the buyers and sellers. I had a guy call me the other day from California, and he was trying to buy. It was just a little 5-unit. The lady had owned it for 40 plus years, only had one tenant in it ever, and 5 units. The way it sounded, it hadn't been updated or anything in 40 plus years. And he's trying to buy it from this lady that just didn't want to deal with tenants. And he's like, wanting to get information from me on what products to use. And I said, well, I said, talk to this lady and see if she'll finance it, over the next, finance it for you at 5%. Or, you can even probably go to her and say, hey, if I give you a couple $100,000 down, will you take, 10,000 a year, or 60, 70,000 a year, whatever it is, and say, hey, I'll give you this much. And then in 5 years, whatever I've paid will just come off the sales price, and I'll refinance in 5 years, within 5 years, or, something along those lines. And that's what he was going back to her with, because, me personally, I didn't have anything to offer him that was better than that. As these rates go up, sellers are just going to have to come to realization that they can't get what they want out of their properties. And that's really all there is to it. I mean, rents can't go up as high as they need to catch up with what the sellers want to pay, or what the sellers are wanting to get. And guys like us that are wanting to buy these properties, we don't want to overpay, and we can't overpay. We're not going to be able to give, it won't do right by our investors. It won't, the bank won't fund them, so the sellers are the ones holding everything up at this point. And I understand why. Nobody wants to lose money on a deal. And a lot of them are really in that position right now, where if they have to sell right now, they're going to lose money on deals. So it's going to be, there's going to be a time frame here where the sellers just kind of have to come to that realization.
It's 19 hours.
Yeah, and our lenders will lend. Their criteria really hasn't changed. The bridge lenders are still looking. They want to lend on something that has an exit strategy. They haven't changed their criteria. The conventional Fannie and Freddie, they haven't changed their criteria. It's the same criteria they've always had. It's just that the whole market has kind of flopped over at this point, and it's rolling over slowly, I guess you could say. So, and it's gonna be a little bit of time before we get to that point. So,
Excellent. I also want to point out here, Daniel is selling himself short as a newbie here. Daniel might be new to the multifamily space, but he's a mega successful single family investor in it's greater Nashville area, right, Daniel? That's where you're at, right? Yeah, so I can't wait to see where he's going to be in 6 to 12 months on this side of the fence. So lots to come from this guy. All right, thanks for the question, Daniel. Then Jerry, are we good for one more? Last one?
Yeah,
all right,
sure.
Sean.
Hey, Jerry, thanks for your time.
Yeah.
Hey, I don't know. I've got a duplex that I'm doing a burr with, and the hard money guys, I got till February to get out of it, and they've changed their rules. Do you do anything with that, since it was bought in like an LLC and I haven't had any tax period to file on that?
Those types of loans are a little bit different than the bigger multifamily, and usually those. Now you're asking if your LLC doesn't really have the finances to be able to qualify for a loan. Is that what you're saying?
Well, I started the LLC in January. I bought the duplex to burr it in February. So they're wanting tax records or filings and stuff, but it's so new that it doesn't have any. So I didn't know if you had any type of lenders who will lend on something like that being that new.
Oh yeah. The way it'll be on the smaller 1 to 4 units, you're going to have to qualify personally through your credit score and things. The loan will close in an LLC, but they're going to look at your personal credit. They're going to want to see you personally, not your income, but they will still look at the income of the property. But a big factor in the loan, they're going to look at it's still, they're gonna look at, after the loan, does the property debt service.
Mhm.
They're gonna wanna see a 1.2 or better debt service coverage ratio. And then they're gonna look at you a little bit closer because it's a smaller property. They're gonna look
Yeah.
at your credit, look at some of your background and make sure there's no felonies, those types of things. But that's something that can be done as long as it underwrites well. So
Okay, maybe we'll talk this week and go further. So thank you.
I put my information in the chat. So
And we'll make sure we'll also post your info on our Facebook group there, Jerry, so that everybody has a chance to see you and the services you provide, and
Okay.
not just the action takers that took it to the Zoom here today.
Yeah.
All right, thank you, Sean. Guys, we're past 10 o'clock here. Usually we close no later than 10. So let's do this way, guys. If you have additional questions, and I saw there's a bunch of other questions in the chat, post them in our Facebook group, and we'll make sure that you get an answer to them. Is that fair? Let's do it that way, so we make sure no questions stays unanswered. Before we jump into the closing side, Victor, Charles, Jerry, any additional comments from you guys that you want to share?
I just want to say thank you to Jerry for coming on the Zoom. I hope everyone got as much information as I did from this. He's a great guy. He's a great resource. Let's be respectful of his time and everything, but definitely if you have questions about lending stuff, hit him up because he's a great resource. And put some fires in the chat for him for being here on a Sunday night. It was fantastic. Thank you, Jerry.
great. I really
Exactly.
appreciate you guys having me. I like to do this. This is what I do. I enjoy it. So, hope to do some business with a bunch of you guys and help you all grow your portfolios and all those things. So that's I enjoy doing that because it's it's rewarding in a lot of ways to be able to help people to get to that financial freedom and all the things that everybody's trying to do here. So God bless you guys, and I really appreciate the time.
Yeah,
Love it.
we'll definitely be hitting you up more about the Dane. That's for sure.
Yeah, for sure.
Yeah, let's get her done. Guys, one last question here. If you guys had a lot of value from today, who here wants to see Jerry back? If you want to see Jerry back, put a 1 in the chat here. Showcase if you want to hear more about that, Look at that. Jerry, thanks for all the value you brought in today. Look, man, amazing.
Jerry, they love you.
Thanks, guys. I appreciate it. And you just let me know when you want me back or need me back. I'll come on. So
Will do. Love it. Thank you. So the way we usually close our Zooms, guys, you know it is we want to leave with high energy. I put another picture on here today, and Doc didn't even know about that I did this. But here you see Doc in front of the game.
You sneaky guy.
That he walked. It was yesterday, right, Doc? You walked it yesterday again.
Yeah, our team we walked it yesterday, so that was fantastic. Actually took my wife and kids, and then Felix met us there, so it was a great time.
Exactly. Most of you know Felix, right? So here we go again. Huddle together. Let's all do stuff together. Felix was there, walked it with the dog, and we could also take some of his knowledge, some of his market knowledge. I mean, Victor is in Philly, right? So we have a lot of market knowledge, but we try to huddle everybody up here and do it all together. Last but not least, guys, we also put a QR code here for the link that you see below is our Facebook group. I saw a bunch of you guys asking about the recordings in the chat. Make sure you guys are part of the Facebook group. That's where we post the links to the Zooms, post the links to our YouTube page. We're not big, flashy guys, right? We just want to share the value. We want to make sure we all come together here, create a community, and make one step forward at a time. I'd also encourage you guys, put your face out there. Put your face out there, showcase on social media what you're doing. You'd be surprised how many people of your network are excited about what you're doing and will ask you when they can start investing with you. Trust me, I know what I'm talking about here. And put it out there, guys. Put put some love also for Jerry out there on social media. Let's also boost his profile. Let's boost all the stuff that he's done here. Let's get that stuff going, guys. Let's make some noise. Let's get some more people in the community and all leverage the value we all bring together here, and let's crush it. You guys know we always love to leave with high energy, so I'm gonna leave you with some music again. Let's crush it, guys. Let's crush next week, and we see each other here on Sunday again, and I can't wait for all the wins you're gonna share next Sunday. So with that, guys, happy Sunday night. Peace out.
All I do is win, 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 no matter what. Got money on my mind, I can never get enough. And every time I step up in the building, everybody hands go up. And they stay there, and they stay there, and they stay there. Cause all I do is win, win, win. And if you going in, put your hands in the air, make them stay there.
Ludacris going in on the verse, cause I never been defeated and I won't stop now. Keep your hands up, get them in the sky for the homies that ain't make it and my folks locked down. I never went nowhere, but they saying Luda's back. Blame it on that contour, the hood call it Luda Yak. And I'm on this foolish track, so I spit my foolish flow. My hands go up and down, like strippers' booties go. My verses still be serving, tight like a million virgins. Last time on a college remix, now I'm on the original version. Can't never count me out, y'all better count me in. Got 20 bank accounts, accountants count me in. Make millions every year, the South's champion. Cause all I do is
win, 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 no matter what. Got money on my mind, I can never get enough. And every time I step up in the building, everybody hands go up. And they stay there, and they stay there, and they stay there. Cause all I do is win, win, win. And if you going in, put your hands in the air, make them stay there.
Swerving in my low, head on the swivel, you know serving me's a no-no. Clean as a whistle as I pull out in my Rolls Royce. Yellow bone passenger, they see it, they say, oh boy. Tell Kelly, back it up, my niggas call me loco. Down for armed traffic.